So hi guys, welcome back. So today in this lecture session, we are going to discuss another very important topic, that is internal audit. Regularly tested area, frequently questions will come from this area, but at the same time, very easy topic as well. There are no, complexities or intricacies in this topic. It is easy to understand. So first of all, let us understand what is internal audit. There are two types of audit from the point of view of independence of the auditor and the origin of the person or the practitioner who's conducting audit. There are two types of audits. One is called external audit, where the auditor is an outsider, and the other one is internal audit, where the auditor can be an employee of the company also. So internal audit also can be outsourced. That is a different story. You can appoint EY to be your internal auditor. You can appoint KPMG to be internal auditor. You can appoint any external party to be your internal auditor. That is a different story. That is called outsourcing internal audit. But by nature, why are we calling it internal audit? Because point number one, it is not mandatory to have internal audit. Point number two, you can have your own in-house internal audit department where you appoint chief internal auditor assisted by other internal audit team members, and then you will have your own department. So it functions like you have a production department, you have a marketing department, you have a sales department, okay, you have accounts department, you have finance department, and you have internal audit department. That means it is as simple as one of the functions of the company, one of the departments of the company, internal audit department. That is the reason we call it internal audit. Now some students ask a very interesting question. Okay, they ask, Pavan sir, when we have external audit which is done by CPAs, qualified ACCAs, qualified chartered accountants, already we have one type of audit. What is the necessity of this second type of audit? So why should I have internal audit when I have external audit? My answer is simple. I'll put it in my own, style in my own way. Do we have Motor Vehicles Act? Yes. Do we have law, regulation, provisions and rules for traffic system? Yes. Do we have traffic lights? Yes. Then tell me, what is the necessity of police? Act, legal system, judge, all these are external audits. Police is your internal auditor. If that police is not there standing in the signal, none of the laws, or you call it provisions or rules or regulations, will be followed. Everything is there on paper, nothing will be followed in reality. Isn't it? So now you just imagine you are driving a car or you are riding a bike, okay? A prudent person, it could be you, it could be I, it could be any XYZ, it could be any Tom, Dick and Harry. So one person riding a bike, traffic signal is there and it is turned into red. So another 60 seconds he has to wait. So he is looking at the traffic signal, he looked at this side, no one is there. Traffic cop is not there. CCTV cameras are not there. So what usually he does? Jump the signal, because you know that there is no system, which will catch you and will penalize you. Traffic signal is there, but CCTV is not there. You know that speedometer is not there. You know that CCTV is not there. You know that cop is not there. Police is not there. So will you follow law? No. Same person, same you. If a traffic, police inspector or circle inspector, one jeep is there, 4 constables are there, 1 sub-inspector is there. So they are checking the papers on the other side of the road. So will you jump the signal now? Never. As if you are the best civil citizen, you will stop even without touching the zebra line. You will not even touch the zebra line, you will wait. When that 60 countdown seconds becomes 0, when that turns into green, then you will start and you will go. What is the difference? Implementation of law, implementation of rule, implementation of regulation, implementation of any plan, procedure or process depends on the controlling person who is supervising standing there like a police. So you know that a person is standing and looking at you. Automatically you behave to be a nice guy. If there is no, this kind of supervision on you, if there is no this kind of a person who is monitoring you, obviously you tend to do so many irregularities and you do whatever you want. You will not follow the procedures and process. That is the reason every company, you look at any kind of company, they will have something called SOP, standard operating procedures. If the standard operating procedures are not followed, can you imagine what kind of penalties these employees will get? Even if you are top performer, you are number one among 1 lakh employees, you are number one. Even then you cannot deviate from any of the processes. If you are in a company, my dear friend, remember the basic rule of organization structure. Remember the basic, management philosophy. A person drives process. It is a business. A process drives person. It is an organization. So always it should be the process which drives the business. Otherwise what happens? You can run small business, you can run business in one location, you can deal with one, department. You cannot have 100 branches, you cannot have 10 types of businesses. For that type of corporation, if you are thinking of, everything should be systematized, structured, everything should be procedural, everything should be based on the process. So this internal auditor is the police who monitors whether the processes and procedures are properly happening in the company, whether they are properly adhered to, whether they are properly complied with or not. So he looks at the risk of the transactions, he looks at the risk of various functions, he looks at the efficiency and effectiveness, he looks at the operations, he looks at the books of account, he looks at the compliance, and most importantly, he looks at the corporate governance. What is corporate governance? Corporate governance is a methodology in which the business is being run by the management, whether it is being run in the best interest of the stakeholders or no. So governance is the way in which a company is run. Corporate governance is the way in which a company is run. So is it run in the best possible manner, following the best policies or no? So internal controls, if you have a basic understanding of this word internal control system, and if you understand the internal control components, there are three objectives of internal control system. There are three objectives of internal control system. One is operating goals. One is financing or financial goals. One is compliance goals. So it is the responsibility of the top level management to design and develop internal control system to achieve three objectives. What are the three objectives? One, operating goals, to ensure that the business is being done in efficient and effective manner, to reduce wastages, to enhance the profitability and productivity, to increase the efficiency of the business. This is point number one. Point number two, to comply with law. This is called compliance goal. So there are so many enactments like Gratuity Act, ESI Act, PF Act, Income Tax Act, GST. There are so many acts, whether all the enactments are properly complied with or no. This is second objective. Third objective, financial objectives, like the development of books of account, preparation of books of account, recording of the transactions in the books of account of the company, generation of various financial, non-financial information, whether it is reliable, timely, accurate. So my system in which I am generating various reports, that can be sales report, that can be production report, that can be any type of report, that can be goods inflow, goods movement register, that can be a bin card, that can be stores register, that can be anything. Whether the information is timely available, whether the information is accurate, whether the information is reliable. Timely, accurate, reliability. So what did I say? Again, summary. Close your eyes and summary. It is the responsibility of the management to design internal control system. Internal control system refers to policies and procedures to achieve three objectives. That three objectives are operating objectives, efficiency and effectiveness, financial objectives like development of books and appropriate books of account which are reliable and which are timely available. Third one is compliance goals, which means compliance with law. So it is the responsibility of top level management. Now imagine you are Sundar Pichai. Imagine you are, running the whole Google. Imagine you are Satya Nadella. Imagine you are Kiran Mazumdar Shah. Or imagine you are Mukesh Ambani. Imagine you are Mark Zuckerberg. So you are the top level manager. You are the chairman or you are the CEO of the company. You are one of the board of directors. You are driving the company. So law says, dear management, you are responsible. But at the end of the day, my mind says, boss, I am an engineer. I can monitor research and development. I can monitor product launch. I can monitor project launch. I can monitor, the contracts with customers and suppliers. I do not know anything about books of account. So imagine I am an engineer. I am CEO of the company. I do not know anything about books of account. But as per law, it is my responsibility to maintain books of account and prepare financial statements. My responsibility. How can I do that? Simple. You need to appoint a person who has a requisite set of skills and you need to delegate the work to the person and you monitor the person. You cannot develop P&L balance sheet because you are an engineer. But as a CEO, as the CEO of the company, it is your responsibility. So you pick one guy, appoint one guy who knows how to prepare P&L balance sheet and you monitor him. Your common sense and management acumen is enough to monitor a person, no? So you don't need to have accounting knowledge to monitor accountant. If you have common sense, it is enough. So again, coming back to the same old story, as a manager, I have to develop internal control system. I have to achieve certain objectives, and to achieve these objectives, to see that the policies and procedures, whatever I have developed on paper, are really implemented properly by my subordinates, I need a police who stands in the signal, who will take a lathi, a stick into his hand, and who will monitor whether things are happening properly or no. That person is internal auditor. So now simple, internal auditor or internal audit function is a management appraisal activity. It is a consultancy which is done on behalf of the company's management. It will enhance the quality of management. It monitors the corporate governance. It monitors the financial reporting system. It monitors the internal control system. It monitors the internal check system. It monitors various operations. It ensures that financial information is available at right time, accurately available, and is reliable. It monitors the efficiency and effectiveness of various operations of the enterprise. When you read this part of the chapter, first time when I read internal audit, when long back, 15 years, 18 years back, when I was doing CA, when I read the document on internal audit, next second I realized this seems to be 100 times more important than statutory audit, because statutory audit is namesake audit. Statutory audit you are doing for the purpose of Companies Act, no? So with statutory audit, who is getting benefit? Shareholder. With statutory audit, who is getting benefit? Shareholder. With internal audit, who is getting benefit? Management. So simple. Statutory external audit is performed on behalf of shareholders. Internal audit is a management appraisal activity. It helps the management. So obviously, external auditor is appointed by shareholders. Internal auditor is appointed by management. External auditor scope is determined by shareholders and law. Internal auditor scope is determined by management, audit committee or board of directors. External auditor will submit the report to shareholders. Internal auditor will submit the report to management. External auditor, has the welfare of shareholders in his mind. Internal auditor has the welfare of management in his mind. These are the basic differences between external audit and internal audit. You can be a chartered accountant, you can be a practitioner, you can be a professional. But try to understand one thing. If you are internal auditor of X Limited, or if you are external auditor of X Limited, your role is extremely different. Your role is extremely different. Internal audit has far wider scope than external audit, because simple, external audit revolves, around the financial statements and books of account. External audit revolves around books of account and financial statements. Internal audit, you will have to look at each and every department. You'll have to look at each and every department. Nothing is outside internal audit scope. You call it production, you call it operations, you call it logistics, you call it supply chain, you call it contracts, you call it legal department, you call it accounts, you call it finance, you call it R&D, you call it compliance. You name any department, internal auditor has to verify all the procedures there. You understand? So first we start with what is the difference between external audit and internal audit. With the whole story what I told you, it is very easy for you to identify the differences between external audit and internal audit. Once you read this, then we'll go back to the definition of internal audit. So first we'll try to understand the differences between external and internal, and then we'll go back to internal. Okay, just read this table appearing on your board, please. So what is the objective of external audit? Expression of opinion on the truth and fairness of financial statements. What is the objective of internal audit? Efficiency and effectiveness of internal controls. You are reviewing efficiency and effectiveness of internal controls. In case of external audit, you report to whom? Members of the company, shareholders. In case of internal audit, you report to, those charged with governance or management. TCWG, those charged with governance, is also nothing but management. But the difference between management and those charged with governance is, imagine you have a branch. Branch will have branch manager. That branch manager himself is the management. You have a division like textile division, tobacco division, agro division, paper division, hotel division. One corporation might be in 100 businesses, no? So every division will have divisional manager. Every function will have functional manager. Every branch will have branch level manager. Every operation have operational level manager. But for the whole corporation, the team of management who drives the policies, who does the planning, and who looks after the strategic steering, that means who designs the strategy, they are known as those charged with governance. So you can say the topmost level of management is those charged with governance. The topmost level is those charged with governance. And another thing is, do you know the difference between chairman and CEO? Do you know the difference between chairman and CEO? CEO is Chief Executive Officer. Chairman is non-executive officer. Do you know what is the difference? Board of directors comprises two parts, two categories of people. One category, see the whole, say for example, there are 10 directors. There are 10 directors. This is boardroom. All the 10 came, all the 10 sat across the table. They discussed after brainstorming. They have, completed some planning process. So they planned, okay, this is our plan. This is our strategy. So the plan is on paper. Now the question is, who has to implement it? So do you think all the 10 will implement it? No. In this 10, there are two categories of people. One is executive directors. Second one is non-executive directors. For executive directors, the leader is called CEO. For non-executive directors, the leader is called chairman. So this chairman is heading the whole board. That is a different story. But predominantly, they are not involved. They do not involve in operations of the enterprise. So it is like I just come to the meeting, I participate in planning, and then I'll go daily I will not come to the office, daily I will not sit in the company, daily I will not do any of, the activities, day-to-day operations I will not do. But executive directors will be there, no? They are employed. Executive directors, they are employed daily. Morning 9 o'clock, you have to go and sit in the company till evening 6 o'clock, 7 o'clock, 8 o'clock, 9 o'clock, 10 o'clock. You have to work and then you have to go. These are executive directors. You understand? Usually, those charged with governance are the top level non-executive directors. You understand? Then, availability of report. So, can you download the report of auditors of Microsoft? Yes. Open Google and ask Google audit report of Microsoft. In 0.01 second, you can get it. Okay. Type internal audit report of Microsoft. Google will ask, are you kidding? Are you joking? How internal audit report will be? Even if internal audit report is put in the website and made publicly available also, it is not the whole report. It is the extracts of the report that will be given in the website. If at all they want to give, there is no compulsion. See, every company has to give their audit report in website. That is mandatory as per law. But your internal audit reports, you don't need to put. Why, sir? Having internal audit itself is choice, no? So how can I say put internal audit report in your website? So these are not publicly available. A company might put internal audit report in their website, but usually no company will put. I have not seen any company uploading their internal audit reports. I have never seen a company uploading. Okay, then scope of the work. So the scope of external audit is verifying the truth and fairness of the financial statements, and that is designed by law. But the scope of internal audit is the internal auditor discusses with the management and board of directors, and based on the management requirements, I need to work. For example, if I am internal auditor, management said, Pavan sir, you don't look at, marketing department. All other departments you can verify. Okay. If I am internal auditor, I have to listen to you. If I am external auditor, if you are saying, dear auditor, don't verify marketing department records, I can ask you, are you kidding? If I am statutory auditor, you cannot tell me, do this, don't do this. Never. You cannot. You do not have that right. But if I am internal auditor, management can say, Pavan, verify this, don't verify this. So, as per management requirements, I have to design my audit work in case of internal audit. But usually, even in case of internal audit also, no management, no board of directors will restrict them, because you are appointing them for your benefit. If you restrict them, the whole process of internal audit will be spoiled. So who will appoint external auditor? Who will remove external auditor? You might have studied this in second chapter. Who will appoint the auditor? Shareholder. Who will remove the auditor? Shareholder. Okay, in case of internal audit, who will appoint the auditor? It can be audit committee or it can be board of directors. Every company need not have audit committee. This we'll study in third chapter. Corporate governance and audit committee will study in third chapter. So every company need not have audit committee. Some companies will have only board of directors. When audit committee is there, they appoint internal auditor. When audit committee is not there, board of directors will appoint internal auditor. Okay. Then the last one is relationship with the company. The external auditor, as the name suggests, he should be outsider and independent. The internal auditor can be the employee also, or sometimes it can be outsourced also. Now, you know what is external audit, what is internal audit. We will see what is the definition of internal audit now. So, look here. The first para says, internal audit is, interestingly, they use the word an independent. Now you will say, sir, how come internal audit is independent? Listen. If I am internal auditor, I went to conduct internal audit of a branch. Do you think the branch manager can control me? Never. Why? Internal auditor reports to audit committee. Imagine, there is a global corporation having a headquarters in New York. They are conducting audit of Indian operations. So there is one internal auditor who is conducting audit of one particular branch or division. If the division manager or the branch manager raises his tone, I will tell, bro, listen, your husband is there, no? The person to whom you will report. His boss is there. His boss, his super boss, senior super boss. I will give my report to him. So better you manage your tone. So my report goes there. So now try to understand, when internal auditor is reporting to audit committee, who is one step above board of directors? Audit committee is one step above board. Audit committee can remove directors. Now you imagine what is audit committee. Audit committee will appoint auditors. You understand? So when the audit committee, internal auditor is reporting to audit committee, all the employees of the organization knows that this guy reports to the top level. So obviously no one will involve in my work. No one will try to influence my work. No one will try to, try to manipulate anything with me. No one wants to mess up with me because they know that I'm internal auditor, I'm a big guy. Many companies, I tell you one thing, okay, internal auditors are directors actually. If you are internal auditor, you are a director level guy. Internal auditor is not a small guy. I have seen one internal auditor of company, okay. In India, there is a very big company called ITC Limited. In ITC Limited, when I was conducting stock audit, I have seen one internal auditor. That time I was apprentice, okay, articled assistant, small guy. I have seen one internal auditor. I took his visiting card. Surprisingly, he has done 9 courses, 9. CA, CWA, CS, MBA, CAA, then CMA, then CPA, then ACCA. I'm like, boss, who are you? Just to do CA, CWA and masters, I felt like my life is gone. So now imagine what will be the standard of that guy in the company. So definitely they are director level people. So what I mean to say is, internal audit, though it is done by employees inside the company, he is not a clerk level employee, he is a director level employee. That is the reason they are independent. Objective assurance and consulting activity. Assurance and consulting activity designed to add value and improve organization's operations. This is the definition. What is this? This is the definition of internal audit. Okay. So I told you every company should create internal control system in order to fulfill their responsibilities and to achieve the 3 objectives. You remember 3 objectives. What are they? Compliance objective, then reporting objective, then operating objective. Reporting objective means financial reporting and non-financial reporting. Compliance means compliance with laws and procedures. Then this operating objective means efficiency and effectiveness of operations. Okay. Now read this para. So what does it say? If you have a system or a mechanism, on paper it is not enough. You should have a person who monitors the effectiveness of the operations on regular basis. That is internal audit. All systems need some form of monitoring and feedback. This is the role of internal audit. Simple. Having an internal audit department is generally considered to be best practice, but is not required by law. This is to be highlighted. Is it required by law? No, it is not required by law. In some countries, for some companies, internal audit is required by law. For example, in India, for all listed companies whose shares are listed in Bombay Stock Exchange or National Stock Exchange, for listed companies, internal audit is compulsory. But this depends, from country to country. In many countries, internal audit is not mandatory. In many countries, internal audit is not mandatory. So this allows flexibility in the way internal audit is established to suit the needs of the management. So I told you, if you are a small business, you don't need internal audit. So in small or owner managed businesses, what is owner managed business? Sole proprietorship. Or at times a partnership also, because in partnership all owners are managers. There is unlikely to be a need of internal audit because the owners are able to exercise more direct control over operations and are accountable to fewer stakeholders. The need for internal audit therefore will depend on, this is a very generic, very basic question, okay. Internal audit depends on what? The scale of your operations. If you are, a big corporate, if you are MNC, obviously you should have, internal audit. So scale and diversity of activities. Then complexity of operations, number of employees, cost and benefit considerations, the desire of senior level management, and the control environment. That means, do you have the track record of any frauds reported in the past? Even if you are a small company also, last year there were three frauds reported. Now, obviously, you would appoint one internal auditor now. So, you will not take the risk. So, these are the factors depending on which you will choose internal audit. If you are a big company, if your scale of activities are big, if you are diversified into various activities, you prefer to have internal audit. Complexity of operations. If you are doing, a simple process, you might not prefer a internal auditor. But if you are having a proper risk management system, proper controls or proper corporate governance system and all, then definitely you have to go. Simple. This pharma companies, if you see, pharmaceutical companies are there, no? They will have process auditors. They will have process auditors. For example, what kind of chemical is to be taken and with what kind of chemical should be mixed with what kind of chemical to make some compositions and all. For every process, they will have inspectors. If you are running a bakery, if you are making, veg sandwich and if you are selling it, you don't need process auditors, no? Simple. So based on the product, based on the complexity of operations, based on the regulation, based on, how strict law will be on you. If you are running a pharma company, law will be very strict on you. If you are running a bank, law will be very strict on you. But if you are running a bakery, law will not be that strict on you. So few entities or few organizations running in certain sectors, they definitely will have internal auditors. For example, you take bank. Every bank will have internal auditors, vigilance department, internal vigilance department will be there. Okay, then number of employees. If you have less number of employees, fraud, the probability of fraud is less. But if you have 1 lakh employees, probability is 1 lakh into X, no? So when your employee base is more, you need internal audit more. Cost benefit considerations. So I have given 3-4 bullet points. Just read that. So due to fraud, you might lose some money. If you are not able to perform your, part of the contract with the supplier, you might lose some money. Or if you are not complying with law, you have to pay some penalties and fines. You will lose money. Simple. For example, by 7th, you need to pay tax. Okay, your clerk forgot paying and he paid on 9th. You have to pay penalty now. Internal auditor will take care of these kind of things also, because they will prepare a calendar, no? They'll prepare a calendar and then they say, hey, boss, this day you need to do this. This day you need to do this. Okay? And sometimes the senior management, they need an assurance that the operations are happening in a smooth manner. Okay, then internal audit is necessary. Then the last one I told you. So previously there are instances of fraud. Then you need to have internal audits. So you have got some, basic understanding of what is internal audit, what are the differences between internal and external audit. So we will close the class with next para. What are the activities? What is the key role of internal auditor? So some bullet points are there. Just go through the bullet points, and once that is done, then we'll call it the day here and we'll see in the next session. So what are the key activities of internal audit function? Assessing whether the company is demonstrating best corporate governance practices, evaluating the company's risk management process, whether the company is following proper risk management, testing the effectiveness of internal controls, assessing the reliability of financial information and operating information, assessing the efficiency, economy and effectiveness of operating activities. This is also known as performance audit. In India, globally it is called value for money audit. Then assessing the compliance with law. Now, if you observe these 4 points, do you understand the link between internal control, 3 objectives and all these points? That is the reason I told you the whole story. Why I told the whole story of the management is responsible for developing internal control systems to achieve 3 objectives. That is what internal auditor role is. So if you look at these points here, evaluation of effectiveness of internal control is there. Then operating this reliability of financial and non-financial information is there. Then efficiency, economy, effectiveness, compliance with law. So all these things are internal control system objectives. which is the responsibility of management. Then providing recommendations on prevention and detection of frauds. Okay, so this para will give you more clarity. Most of these activities can be seen as helping the management to comply with corporate governance requirement. So all these bullet points are there, no? Actually, nowhere it is stated that they are internal auditors' responsibilities. Everywhere they are stated that these are the responsibilities of management. But because I cannot do this, I am appointing internal auditor. No law asked me, Pavan, appoint internal auditor. But I know that I have to do these 5 bullet points. I cannot do that. I am appointing internal auditor voluntarily. So internal audit is management appraisal activity to help the management in fulfilling various responsibilities, including corporate governance. You understand? So these are main roles. And then there are some other roles are there. So sometimes if there is an instance of fraud, so MD came to know that there is a fraud happened, in the company. The first phone call goes to internal auditor. MD calls internal auditor and says, boss, please come to my office. So in so and so branch, this happened. You go and do investigation. So these internal auditors will do fraud investigations. They review information technologies. They do mystery shopper visit. This is very interesting. I have done this. Okay. This is very, very, very interesting. I'll tell you what it is. Okay. Now imagine you have a chain of hotels wherein management said per night the hotel room should be given for so and so price. Say for example $150 or in terms of 4,000 Indian rupees. So like that you have determined the rate. There is one possibility. Imagine randomly one guest came, one customer came. In the reception he asked, hey, do you have a room? So the manager said, or the receptionist or the manager said, yes, we do have a room, 4,500 rupees or $150. And the person said, oh my God, I cannot afford that much. I don't have that much of money. Then he will throw a stone on you. He will ask you, hey, I don't need a bill. I do not have that much of money. I will not be there for 24 hours also. Just for 4 or 5 hours, or this night I'll sleep and next day morning I'll get ready and then I'll go. I have one interview. After that interview, I'll go back to my hometown. So can you please do me a favor? I can pay only $50. I can pay only 2,000 rupees. Okay. Then if the internal controls are not strong, what this person will do, the manager or the receptionist, what they can do, they can say, okay, do one thing, go to room number 201. That's it. So no filling the room, no booking the room. They have not raised any ticket. They have not entered into the system. So just like that, they have given you one room. Nowhere it is recorded. No CCTVs are there, or even if CCTV is there also, who will identify? So he entered and then he will exit. That 2,000 rupees or $50, whatever he has paid, will straight go to the pocket of the employee. Don't you think it is a fraud? Don't you think there is a possibility of this in small and medium scale hotels? Small lodges and small and medium scale hotels. Definitely this happens. 100% it happens. Even when you have a contract, Airbnb and OYO rooms, this kind of tie-ups will be there, no? Even in those cases also, you go to a hotel that is exclusively under the management of OYO. Big board you will see OYO. But when you go inside, they might ask you, pay in cash, no? So we do not take by transfer, don't pay in OYO app, pay in cash. And they will not enter it into that OYO app records. So the money straight is going into the pocket of some other guy. So what, and imagine you are a non-banking finance company or a bank. Every bank has a set of clear instructions on fulfilling condition 1, 2, 3, 4, 5, 6. Only loan can be given. Without that, loan cannot be given. Now, if I am internal auditor, one of my team members will go to the bank. They will, put up a case as if a very genuine case. He will go and he'll ask, sir, I need a housing loan, sir. So one person, one of my employees or one of the persons I have picked for this job, he goes to the bank and or non-banking finance company and he say, sir, I need housing loan, sir. If this housing loan is given, manager will get some 10,000 or 20,000 incentive. Business, no. Now, he said 7 conditions. In that 7 conditions, 6th point is, imagine, net worth statement certified by an auditor. I said, hey, you asked my PAN card, I'll give you. You asked my Aadhaar card, I'll give you. You asked my bank statement, I'll give you. You asked my Form 16, I'll give you. You asked my salary certificate, I'll give you. I don't know what is this net worth certificate here. Now what the bank manager will do? Will he say, sorry boss, without that we cannot give loan, your application will be rejected. Please get it done and then come. Before rejecting this file, 20,000 rupees is coming into the mind of that staff, no? Then he might jump into, some deviation and he might feel like, net worth statement pro formas we have, so we'll manage. We have some auditor, he'll put one stamp and he'll give that. So, chalo, your loan will be given. How to identify this kind of things? Do you know how to identify? Internal audit team member, without the notice, without the identity, they go as if they are genuine customers. My articled assistant, he went to a hotel where I am conducting audit. So the hotel reception person doesn't know who he is and he is requesting, brother, I came to write the exam. Tomorrow morning exam is there. After that exam, I'll go back. I don't have money. I am a student, I cannot pay that 4,000 rupees. So I have only 500 rupees or 1,000 rupees. Please take this money and give me one room. They gave the room. No bill, no, nothing formally written in any of the registers. Room is allocated to him. This is how red-handedly we pick the irregularities. Compliances. Look here, compliance. So for retail and service companies, the internal audit staff can pose as customers. So you are posing as if you are a customer to ensure that customer service is at the required level. You can verify compliances, you can verify whether they are treating the customer properly or no. Okay, then contract audits. So any long-term contracts entered into by the company entered into a long-term contract. Internal auditor will do contract audit. What is that? That legal 6 pages legal contract you entered into, no, they will verify whether any of the clauses is against the company. Otherwise, how big risk it could be? You are not a person who knows the legal clauses and all. You just signed the contract. How risky it is, Many people will take insurance policy. After that, mediclaim. After that, when the person is hospitalized, then insurance company will say, this is not covered, this is not covered, this is not covered. Then you will ask, you have not told this. Then they'll say, boss, that is there on the policy document. But the policy document will be printed with, 2 size letter. This letter is 12 size, okay. So that insurance contracts, if you see 4, this small ant head size letters will be there. So which you cannot read or you cannot understand. But in corporations, never. If there is a contract, there will be a contract audit. So making sure that where the material or long-term contracts are entered into by the organization, the contract is written to protect the organization appropriately and whether the terms are properly complied with by the suppliers. You understand? Then asset verification, fixed assets verification and all that they'll do. Providing direct assistance to external auditor. This is a very important thing. We discussed this in ISA 610, International Standard on Auditing 610. This covers, the internal auditor's help to external auditor. And when external auditor can utilize the work of internal auditor, when external auditor can rely on the work of internal auditor, all these things we'll discuss in the standard. Okay. So with this, shall we call it the day here? So we'll see the balance of internal audit in the next session. Okay. Thank you.